Hello traders, today I want to show you a very peculiar instrument which is very important for every trader. In trading volume terminal it is called HFT volumes, from the word high frequency trading, because these are fast chains which happen in their particular moments on the chart, and they can inform you about the trend reversal or trend continuation. The duration of these chains can be different. It can be 3 milliseconds or like here 900 milliseconds. Most popular these chains are up to 3 seconds, but there are also some chains that are up to 20 seconds duration. How to set these settings on the chart? This is oil, and it is like an example. We open the pure chart, and here we will try to manage the settings which we will put on this chart. First of all, we establish maximum range in pips. Most often it is the average week on the chart, on the time frame which you are used to trade. And here you see 38 ticks, but it is a rather long week. Here we see 29 ticks, here 14 ticks, here 20. Let's take 20 as an average, and maximum interval in milliseconds. I used to use 3 seconds not to miss important information, but if it is stop loss hunting, the interval between ticks will be much lower and the duration of all tick chain will be lower. And if it is involvement in trading, it will be higher. I will show you later how to differ. So the chain can be long, but the time between each volume, each trade which passed on the chart, it should be not more than 3 seconds. So we take places where we see fast accumulation or distribution. Let's continue. In settings, we put minimum tick volume. Of course, we can put auto set volume filters to see which volumes are important for these particular instruments. So in this case, we can match the big volumes which we want to be left on the chart, and in such a way we will see what handmade settings we can make. So the average volume which we want to be left on the chart is like 240 contracts, and the minimum tick must be lower 10 or 20 times than total volume. So we can put here 12 contracts. Minimum tick volume 12 and minimum total volume 240. So delta filter, most often I use like 60%. It is the preponderance between bid and ask ticks. I'm interested in imbalances, so if you are interested only in big chains, you could put here 0 delta filter. But for me, delta filter is very important, so I put set plus load, and we see that the chart is much more pure than before. The amount of HFT volumes have to be not a lot, but also not a little. Average is like 3 volumes per day. And then we also not use all the volumes. We use volumes which we can explain according to the context. If we put, for example, a trend line here, and we see that HFT volume was created on the line, we can say that algorithms sold here in liquidity, so with very high probability this level will be broken. So we will try to find sell opportunities. Of course, the safest is this zone, lower than this HFT was created. Another situation, for example, these HFTs, what do they mean? Here you see a very peculiar level, this level. So the price breaks up this level. This HFT means that stop losses were hunted, and this, the second one, we see the involvement in longs. So this was created. In this case, we can short lower than this stop loss hunting was made, or after the retest of this structure. For example, HFT volumes during traders engagement can be fast like here, but stop losses can be slow and take for a few seconds. Here you also see a very interesting situation for bulls, some accumulation, and they want to go upside, but then very sharp movement and liquidation of stop losses here, and fast reversal. On the retest, it is very interesting point to enter, and to put stop loss under these HFTs. In this case, we also see that the price broke the structure and stop losses were created, then involvement, very strong involvement, and from here really we can try to sell or to wait when the price will break this level, fix under the level, and we will try to catch some movement downside. So you see that HFT volumes is very important instrument for analyzing the price action. You can also add one filter, for example, HFT volumes first, and the second HFT volumes another settings. Open gold and put here auto set filter, for example, set plus load. So you will have these volumes set on the chart according to their liquidity. Of course, there can be a lot of, and you have to filter these volumes by your eyes, but nevertheless, you never miss opportunities in such a way. Of course, manual settings are much better, and they don't give us fake signals. As you see, they happen in very important places. This structure was broken, the HFT was created, this structure was broken, and fast reversal. Let's switch off automatic filter. You can press hotkey 2 and it will be switched off. Also, you can press hotkey 1 and the first HFT volumes filter will be switched on in such a way. So you can see that HFT volumes happen in very, very important places, after which it can be even the trend reversal. Of course, if it is according to the context that you understand, the stop loss that were hunted and the price can go higher with a big risk-reward ratio. So now I will show you what is it on the tick chart. On the screen you see how data from the time and sales tape creates the tick chart. When a significant tick chain passes through the exchange according to our searcher settings, we receive signals on the platform and also by email, so we can press hotkey 1 to visualize it on the chart. Here we see how some algorithms bought an asset at a discount, bought out limit sellers, and the price started to rise immediately. And this tick chart is the most important because it really creates the candlestick chart on which you can see these reversal formations and make better decisions. But the most interesting for us are the situations where we see the activation of stop losses, after which the price does not go downside. Market makers take these market sells and the price reverses immediately. These situations give us clear logic to follow the market maker and to enter the positions when a lot of traders exit their positions. So we have bigger advantage and can predict that the price will go higher from that point. Now I will show you the difference between stop losses and market buys or sells. For example, here we see tick chain which is created with market sells, these two market sell trades, and stop losses. This chain stops because when the price comes to the level step by step and it touches some levels, for example, here is 3.4495, here stop losses are, and they activate and go buy market and eat all the buy liquidity in market depth. That structure was on Cooper and this structure is on British pound. So we see the first HFT volume. Fast market sells with duration of 359 milliseconds, and then market sells which push the price lower. If we see that the main volume in this tick chain, it is 443 contracts, it is not lower than previous low, so it is on one level. So we can say for sure that this is market sell. These two HFTs are market sells. These are not stop losses. In any way, the market can make reversal, but we need to identify exactly what is it, to insert it in our market analysis context correctly. Here you see how these two HFTs look on the 5 minutes chart. If it were stop losses, the HFTs will be below the previous lower low. But these are market sells. And we understand that this trend line in British pound, it will be broken. And after the price will make some reversal from here, it will be broken. And we can use this understanding because market maker maybe here got the liquidity and he will unload it here because here there are stop losses, and then it will go to the direction of these huge market sells. Let's take a look on other examples. For example, these are market buys on Nasdaq, because the base of this chain, it is not from higher high. These are market buys, one print by market, because it starts lower than this higher high. It gives us understanding that first of all the price will go lower, market maker can unload this position, and then it will go in the direction to these big boys. But stop losses, they look exactly like these chains. At the price it moves downside step by step, and at some point it activates sell stops. Here is the price 94.86. Often very comfortable place to put stops under some round values like 85 or 84.90. And here you can look vice versa. Also stop loss activation a bit higher than round value 101.5. Here is it. But before this stop loss chain, some market buys, 22 contracts here, 15 contracts. You can see such chains, for example, on oil, the combination stop losses and market buys. This chain is 1 second, 238 milliseconds, and it started from here. You see a lot of trades, here market buys in level, then stop losses, then also market buys in level, and here also 48 contracts, and then also stop losses. And this is very peculiar chains because they can lead to very strong reversals. And if you look at oil, that day this was that tick chain, and it led to a very strong reversal in this asset. And I showed it for you as an example before this reversal happened. So no matter what you trade, the physical aspects of this instrument is the same everywhere, because market psychology, when a lot of traders bought and were involved in trades, also some traders exited their positions, and price does not go higher, it reverses, and we can predict that market maker will unload it lower. As here it was in oil. When the uptrend is broken and the market went down, here he can unload the position and then start to find out the next place of liquidity. Of course, the market can go higher, but then you can get a small stop loss. But it is really worthwhile place where there is high probability of reversal. The price never will stay here. It can be or trend continuation, and we can open long position even from here, or it will be reversal to the downside. As you see, there can be a lot of HFT volumes on the chart, but we must distinguish wheat from the chaff and to take only that volumes that tell us about stop loss hunting or involvement. If you look on this asset, it is silver, you will be able to see that the most significant and interesting reversal points were here and here, in this point. And they are really simply explained. If we see this structure, it is a descending triangle, and there were two ask HFTs that were created. Here, after breakout of this structure, and the second one, it is involvement, and in addition to this, it hunts stops which were set above this high. And of course, after such interesting stop loss hunting and involvement, if the price doesn't go higher and it stops and starts to reverse, we need to use this opportunity to open short positions. This is really important for us to combine our price action analysis structure analysis with volumes. If you don't see the reason why HFT volumes were created, don't use to predict further movement. For example, the second formation, was also after breakout of this structure. The reason why the price made reversal from here is this particular level. And many traders, they tried to open buy positions from here because they expected that the price will make the third rising wave. It is rather clear from the technical perspective, but to set the stop loss with high probability that it will be in the safest place, we need to enter after these volumes. And then, and only then, we can really put the stop loss here, and it will be the safest place for us. I will show you this tick chain. It has the duration of 21 milliseconds, and for silver, it is significant. Here, you can see on the tick chart every deal which happened that time. And this one, it is exiting by market from positions by limit orders which standed here. So market maker finished to collect the position, and now the price makes fast reversal from here. So we see that the price really made the third wave of movement, but the best place to enter was here. So we can make a conclusion. We can use HFT volumes for everyday trading to get the best entry points with higher risk-reward ratio. So traders, if you enjoyed this video, please put the like button and subscribe to our YouTube channel. Thank you very much.